Good evening, everybody. Tonight we have the honor of having Tom Busby back with us. Tom has a career dating all the way back to the 70s. He has been published in Futures and Active Traders magazines. He's made appearances on shows such as CNN and MoneyShow.com and has more than 30 years of trading experience and has helped students become better traders. So with that, Tom, welcome. Glad you're with us.
Well, thank you, Becky, and I guess I can get started. Hello, folks.
Yeah.
Where's everybody from? All right, folks, this is a fun time of year for a lot of people who's been around for a long time. The trading seems to get better in December, and I'll give you some of the things that I think that you can focus on. And tonight, with it being the 1st of December, we've got a whole month to look at all this stuff happen, so that makes it fun. I'm Tom Busby, and thank you for having me tonight, Becky and Steve and Jim and all you guys. So let's get going here. All right, I have a rule when it comes to risk on trades, and when I use this, it's some people say, well, how do you do that? Well, here's how I do it. I basically have an arbitrary risk point to start out every analysis, and that is $300 per contract if I'm trading futures, $300 if I'm trading options, and $300 if I'm trading stocks. So if I have 100 shares of stock or 1,000 shares of stock, I use 3 points, and that's the way I set up my trades. And I find that it works really good, especially if you're an active trader, to keep your losses minimized, and it also helps you, to overcome that fear of making those trades. I think some people heard from Jeff Smith earlier, and I'm sort of the cleanup guy to come on here tonight and talk about our experience in stock, futures, and options. I trade all three. I trade in both on a short-term basis and on a swing basis, and as well as long-term. So I've got trades I've had for many, many days, many hours, and many months. Now, a little bit about my background. Electronic trading, early on I saw the need for it. Going back to the crash of '87, where it took almost 3 days to find out where you got filled, I pretty much said, this has got to change. Risk is too great when you don't know where you are. And so when the exchanges started experimenting with electronic trading, I was very fortunate, and I got selected to be one of the 50 people that had what's known today as the Globex terminals. And the Globex terminals allowed us to trade the futures market and trade in around the clock. And it was pretty neat to be one of those people. And I saw the development of electronic trading along the way, the speed, the different things that technology had changed over the years. So pretty much any platform out there, I've used it. And I love the fact that, with the click of the mouse, you can be pretty well exposed to the market, or you can be out of the market, and that makes it great. I'm still a member of the CME, I graduated in Georgia, and I also was an officer in the United States Air Force. Now, Jeff Smith is our chief instructor at DTI, and Jeff is, he started with me when he was 17 learning about the markets, and through that time, he became a mechanical engineer. And as our business grew in Mobile, I convinced Jeff to come to Mobile and help me teach. And he's been teaching with me now for about 14 years. He trades also stock, options, and futures, currencies, and commodities. Now, my career started with the S&P, and I can go back to 1982 and tell you that on the first day that the S&P traded for the public, I was there. I actually traded on that first day. And one of the things that intrigued me about the concept of the S&P is that 75% of all the stocks that you're familiar with would follow it. And I knew as a stock trader that if I could figure out the path of the S&P, then I could figure out which stocks to buy and what direction to play. And so early on, I was clued into that, and that was quite an advantage. And then the global market, where the S&P would trade at night, and I had that Globex terminal, I could see the power of when the U.S. would close and the U.S. would open, what would happen in between, the Asia and European markets. So the knowledge about that one fact, 75% of all stocks follow the S&P futures. Here's some of the stocks that make up the S&P 500. You're familiar with them. You might have used some of these to sign on tonight. I see Apple's there, IBM, Microsoft, GE, just household names that you're familiar with that make up these large cap companies. Now, I believe that the markets never sleep, and so how can we profit from that concept? That's sort of the question of the night. How can we profit? Well, at DTI, we use 3 approaches to the market: time of day, key numbers, which if you look at key numbers, sometimes they are blurry when people talk about it, and then, of course, the indicators that tell you and help you decide direction. I'll show you some easy ways to get direction, and I'll talk about time of day and key numbers in that process of trading. All right, let's talk time. Think about the market. Let's think about tomorrow's market. Tomorrow's market is Friday. Friday's already started. We started trading in Asia tonight, and if you look at tonight's market in Asia, you'll see that S&P is pretty well unchanged. Not a lot's happening right now, and this time frame will last about 3:30 a.m. in the morning, and that's when we switch the emphasis from Asia to Europe. In Asia, though, before we leave, I want to give you about 2 markets here to focus on. One is the Nikkei. The other one's the Hang Seng market. They're sort of the markets that I follow to find out direction as we go into Europe. Now, Europe, there's 4 markets there. The CAC, which is the French market, the Swiss, the FTSE, and then the big DAX. The DAX is a market that I spend an awful lot of time around, watching, and forecasting from. That's what the DAX is going to do. And, of course, as we move into the morning, everybody is familiar at 8:30 Central Time when the market opens. There's a time frame. This was a real breakthrough for me when I figured this one out. You know, I'd do trades in the morning, I'd lose money in the afternoon. I couldn't figure out why until I figured out there was 2 market flows to concentrate on. I call it the East Coast from 8:30 to 12:30 and the West Coast from 12:30 to 4:15. Once I figured that out, my consistency went up. So look at the market and look at the different indicators for each of these time segments was a breakthrough back in the day. Now, here's another way of looking at it. We started in Asia, we roll into Europe, the U.S., and then we finish out today. And that makes up a day. So actually, there's 4 markets in one day. 4 markets that you got to know the trends for in one day. That's what makes it so hard, the 4 markets. And the key numbers. I told you they're blurry when you look at it. Well, we simplified the concept of key numbers at DTI. And I can explain that and show it to you and how it works, because if you've got to have these numbers. This is what you trade off of, these numbers. Support, pivot, resistance, we use the openings. Now notice the order that we do that in: yearly, monthly, weekly, and daily, in that descending order of time. And I'll just ask the question, does anybody know where the market opened the year at on the S&P? Okay, it opened at 1837. That's a question, Achilles, that you have to know if you're going to make a lot of money in the market, because 1837 was the start of the year, and knowing this one fact would have kept you on the long side of the market with your stocks. Now the S&P is at 71 tonight? Yeah, 2071. And I'm going to show you some other stuff that's sort of neat too. The indicators change with those 4 time segments. At night in Asia, we use the Hang Seng, the Nikkei. For European markets, we use the DAX, the FTSE, the Swiss, and the CAC. During the day, we use standard indicators, tick, advanced decline line, and the major futures running together. This is what we use during the day. What do you use to determine the flow of the market? I mean, like, for example, do you use fundamentals? Use technicals? What do you use to decide to be long, short, or out? Because until you get that question right, whether to be long, short, or out, you won't make money. You have to have a method and a process in your analysis that helps you determine the flow of the market. I'll show you how easy ours is. It lies in the code. You take the yearly opening price, the monthly opening price, down to the week, to the, where we're trading today, and that breaks into those time segments. I told you we're trading in Asia. I told you that we opened tonight at 2071.75. The market's currently at 2071.75, pretty much unchanged. There's no trade right now. That's what it's telling me. Now, here's a good way to stack it up. I told you 1837 was the yearly open. We opened the month at 2063, and we opened the week at 2063, which means that right now the market's higher than where we opened the week. So the next thing that I would look for is being higher than where we opened the time zone of Asia, which was 71.75. And if you get all those lined up, then you got a trend you can trade. So in bull markets, they move slower, and that's what's happening tonight. In bear markets, they move real quick. We had a real quick correction from the day after Thanksgiving at 10 o'clock in the morning to Monday when the market went down and started stabilizing. But it happened real quick. That's the way bear markets are. They move quicker with really smaller corrections. We actually played that position short from Friday to Monday. All right, let's look at some trends. Over the past 50 years, November through January is bullish. November through January is bullish. The S&P is averaged up about 4.4%. The Dow is up about 4.3%. So the trend, if you look at the seasons from November to January, is bullish. And here's a little fact that you can get out of the Trader's Almanac. Anybody ever use the Trader's Almanac? The Trader's Almanac tells you that from November through May, if you stay invested, and I'm going back a lot of years, you have a positive return. Where you don't have a positive return if you stay invested from May to November. Interesting little fact there, isn't it? All the gains have occurred between those months. All right, in December, on average, S&P and Dow are up about 1.7% on average for December. 1.7. Before I go further, let's pull out an old-fashioned calculator and take 1.7% added to the 2063 monthly open. takes you to a target price, okay? Takes you to a target price this month of $2,098, okay? $2,098 if it goes to the average up move here in December, $2,098. That means 75% of stocks, okay, would move up during that time period. Well, here's how that November is broken down. Market is up November through the middle of December. The last 2 weeks of December, let's talk about that. Notice we don't have a line on here about that. But the last 2 weeks of December go this way. 10 days out, you got a very strong 5 days of up, and then you got 5 days of correction in the end of the year. That's an average season. First 2 weeks of January are choppy. The last 2 weeks trend. Now here's another little known fact, and this is something I learned from Larry Williams. Okay, and here's the cycle for you. The 10-year cycle, the 5th year of that cycle is the most bullish. You know, the average gain is 28.5% for that cycle, which means what? What does that mean? That means that the headwinds are blowing higher. The headwinds are blowing higher in 2015. So we got a big year in front of us. Big year in front of us. Last year, that's what the market looked like. If you long the market, you stay long to the end of the year and then be cautious. Most bullish days in December just before and just after Christmas. So if you take 2 days to look at, the days prior to Christmas and the day after Christmas are the most bullish day. It says be out by the 2nd week in January. And what they're talking about here is small caps. Small caps tend to rally about mid-December to January 15th. Another insight in the market that we'll use. The first quarter sets the tone. The low of an up year happens in the first quarter, and March is the weakest of the month. What happens in March of 2015? What do you have going on with interest rates? Is there a big meeting that happens in March of 2015 that you need to know about? Let me ask that question again. Is there something in March you need to be aware of right now? The Federal Reserve meeting. That's exactly right, Tony. The Federal Reserve meeting, okay, happens in March. Now, have you been hearing rumblings about an interest rate, a change in interest rate policy? Has anybody been hearing that? Well, I have, and I think that the most likely time for it to occur is in that March, okay? That's what I think. Now, here's some more facts about the year, okay? So, I want you to write the following down. Everybody write the following down. Here's what I think, looking at our DTI cycle chart, here's what I think. From January to mid-March, you're going to have a very strong rally. So let's just think about that. January to mid-March, and then you're going to have 30 days of a corrective move from mid-March to April, and then you're going to have another rally to the end of May. June is going to be a seesaw month, Now write this down. You got to remember this. July the 4th, when we come back from the holiday, the fireworks are going to go and blow. And we're going to rally from July the 4th all the way to Labor Day. Another seesaw type period in September, followed by a strong rally that kicks off in October that goes to the end of November. That, to me, is what our DTI cycles say for next year. I hope you got all that, because that's some pretty important timing that I just gave you. That's it. Thanks, Adam. Perfect. Okay. Trading a holiday market. I'm going to, this year, host a 2-hour webinar. And it's going to give you the play-by-play details to how to play this holiday market starting on December the 18th. And so we'll host it at 10 o'clock to 12 o'clock. And we'll outline the hour signals throughout the end of the year for you. And I'll teach you where they come from during that period of time. So this is something I've never done before, and I thought that I would do it this year, and we're going to do it 10 a.m. to 12 p.m. on December the 18th, that Thursday. Okay? We'll talk about when to trade futures and stocks. Then we'll talk about small cap stocks that we're going to be buying, the options that we're going to play, and the future strategies that we're going to use for those next 10 days. I think you're going to love it. And I'll show you how to take that global clock to get all these trade setups. And remember, every one of these trades that we do live here on this March 18th to the 10th, okay? March 18th, or not March 18th, December 18th between 10 and 12. We'll tape the strategies behind each and teach it to you, where you'll have it going forward for those 10 days. I've been trading it for a lot of years, and we're going to record it, and it's going to be pretty exciting. Now, you also will get a bonus of 2 recordings on demand, Introductory Futures, Stock and Options, and a professional guide to managing your 401k. Okay? In fact, we'll also include our retirement portfolio that we currently are managing. Adam, write that down. We said we would give that to him. Okay, that's our strategy. And we're doing that for $97. It will be recorded, so if you can't make it, you'll have the details outlined in the playbook for those 10 days. That's exactly what we do. Now, what I'm going to do now, if it's okay, is go over to www.DTI Let me go over here, and I'm going to show you. Let me go over there where you're looking at that and go to the desktop and show you something. Does everybody see the E-mini right here in that compass chart of mine right here? Look at this. Everybody see that? Notice that I get, well, here, let me do this for you. Let me blow up the font where you can see this. Font. The reason I want to blow up the font, I want to show you how this does this. But look at the font. The E-mini is saying that we opened tonight at 71, and that the high tonight is 72.50. And the 1230 number is 74 with a 5-day high of 77. So this is your number right. You want to see that 77 exceeded tonight for us to go higher tomorrow. I'll tell you the seasonals tomorrow or week. I'll just tell you that going in. Now, let me ask you, is there any stocks you want me to look at? And I'll give you my opinion on them, if you got any stocks. Okay, let's look at Apple. Apple's a great one. And I'll look at Google too. Okay? Okay, Apple. Apple, okay, has an opening, a 115.44. It has a week opening 118.50. It has a month opening 118.50. It's got a 5-day low of 111. It's got a 5-day high of 119.47. I will tell you, write this number down. If Apple goes tomorrow above, see this blue bar right here? Let me point this out to you. See this blue bar here, this reference bar we call it, right there? If Apple goes above that high tomorrow, which is 116.81, the run in Apple will start. I think Apple should hit 130 by December the 22nd. So that's what I'll be looking at when I go into tomorrow's market on Apple. Everybody see it? All right, let's look at Google real quick. Now, Google is a bellwether stock, okay? If you look at Google, it closed at 537. Everybody see Google at 537? This is a 30-minute chart. Closed at 537. If Google takes out 540 tomorrow, okay, Google should start a rally. Let's look at a swing chart now on Google. If it takes out 540 tomorrow, you should see a minimum of 550 to 555 in the next 3 days. So keep that in your mind on Google. Okay? I'm actually long Google right now. I'm long Apple too, but I'm going to buy more if it goes above that price. Okay, let's do one more stock. Oh, I got it. You want me to go back to gold, Carrie? I'll go back to gold. Gold has been the hardest market for me to trade this year. I tell you, I got great stories on gold trading, but I got to tell you, this year has been the most difficult market. But I'm going to give you a number on gold. If you look at the yearly open on gold, it's 1204. We're at 1204 right now. If you look at today's trade, if gold clears 1213.5, about right there, you're going to see it challenge some highs up around 1225, 1232 tomorrow. Write that down on gold. I thought I'd share that with you since I trade gold. All right, I'll do one more stock. Give me another one. Oh, well, I have Lance ask me about one of my favorite topics, crude oil, so I got to do crude oil. Y'all be thinking of another stock. All right, look at crude oil. Crude oil is in a downtrend. This is a swing chart. If you were in my room, I'd show you how on October 15th at 80, I said it was going to test 70s, okay? Let's go to a shorter term chart on crude. 66. If you see crude break 66, it should hit a target tomorrow of 64.80 right there. The target off there should be 64.80 if it breaks that number right there. I'll do Tesla and then I got to go, but I want to do Tesla for you. All right, here's Tesla. Tesla is weak right now. It's weak below 242. The target is 221. And I would look for Tesla to go down and test that area before it goes up again, okay? That's what I would think on Tesla. Weak on Tesla, looking for lower prices. All right, let me test you. What is the gold price I'd be serious about? You remember what I told you on gold? What was the price? I'm testing you now. That's right, 1213.5. What is the price on Google? I'm testing you on. $540 on Google, correct. Okay, and the last one I'm going to ask, because you're great listeners, what was the price what was the price on Apple? Sam already read my mind on the question. That's great. Adam, if they fill out that survey, we'll give it an audio copy of my book, Winning the Day Trading Game, if they fill out that survey. Okay? Adam will post that for you. All right, let me go back to my slideshow. Yeah, fill that little short survey out, and I'll do that. Okay, so what are you going to get? You're going to get the game plan and the playbook for the last 10 days of the year. You're going to get the strategy, the rationale, the setups for futures, options, and stocks on this holiday market seminar. I'm excited. I hope you are. It's been nice. I want to thank everybody for inviting me here tonight. Thank you very much. And remember, after the mid-month of December is when things heat up. So be there and be counted. Thank you for coming. That didn't take too long to get all those good points. Thanks, JG. I appreciate that. You know, you got to have a little fun as you're making money, okay? And we'll show you more in this seminar, absolutely. Great, great question. Super. Adam, they just click that link. Is that the way to do it? Thanks, Frank. Thanks, Bernard. Thanks, Nene. Like I said, tomorrow, if Apple goes above 116, well, thanks, Wayne. Look what Wayne typed in there. That's an awful nice. Apple gets above that 116.81. Let's make some money together tomorrow. See ya.
Tom, thank you very much. Good stuff, everybody. This is just common sense investing, just putting more information to where you can use it to your advantage. So take a look at this stuff. Tom's got very good, rational, reoccurring situations that at least puts you in the right place at the right time. So with that, Tom, thank you. And everybody, have a good evening. We'll see you in the chat rooms.